Hello, and good afternoon again. Back with George. This is a fairly impromptu stream, but we wanted to cover some more ICT with you. So welcome back, George. Would say it's been a while, but we spoke on stream this morning.
We did indeed. Hello. How
How?
are we?
I'm good. Yeah, it's not really done much trading today. I had a couple of trades in. I think CPI was okay. It was good. Printed under.
Yeah.
Fairly boring day. It was basically you had a little market pump and then it just seemed to go back into its shell a little bit. And it'll be interesting to see how the rest of the day plans out. But I don't tend to trade on Fridays that much.
No. The TradFi week is done for you on Thursday, is it?
I wind down. I don't particularly like Friday price action, particularly unless I'm scalping. Like I find I don't want to hold swing positions into the weekend.
Yeah.
I don't know if you're the same.
Yeah, I'm the same. I mean, I'm on a funded account, so I'm actually not allowed to hold over the weekend. But yeah. Oh, good in the hood.
Yeah.
Not many trades today, other than obviously we've had the signal that we did earlier.
Yeah.
That EU short entry never got hit.
No.
Which is fine, because potentially there might be another one on the cards today.
Okay, interesting. You can walk me through that one.
Certainly.
Gold is just on a different level today, isn't it?
Yeah, I'm going to sell on that as well.
As am I. I think we had the same entry.
Yeah.
But yeah. Anyway, back to it. We've got in the chat. Got Ergi again. Thank you very much. What a man shows up. Yeah, I think should we kick off? Go through some of the trades that you've taken this week, why you've taken them, and what you've seen, and we can go into that ICT methodology in a bit more detail.
Let's do it. I'm just currently eyeing up Euro because, long story short, bearish on the daily, bearish on the 4 hour, and depending what time you class London session as, we have the London session high is just being swept. So now we made a new high. I want to see candle close below this low. That's the wrong line. I want a trend line. If I can see, if we can get a candle close below here, then I'm going to look for an entry to short it. Where's previous day low? Probably in terms of target. Yeah. So we'll see how that goes. Not sure where to target, but if in doubt, 1 to 3 it out. GU is pretty much doing exactly the same thing. I'm also bearish on the higher time frame, on daily, going down on the 4 hour. We're down. I think we've hit daily fair value gaps on both. I think that was news, right? News that sent us up there.
Yeah, it would have been. So
now, I just GU. Excuse me. GU needs a bit more structure for me first.
Yeah.
Forgive me. Just got my other computer running. Yeah. So.
Stopped out on gold.
Yeah, me too. Bugger. Never mind.
It's not good. Had better.
We move on.
Yeah, so is life.
How is the signal from earlier.
The Appy chain.
Appy chain. Let's get them signals off my chart. Oh, look at that. Look at that.
Straight in at the top on the wick at 49.
Just
I don't think we need. I'm not ready to take profit on it yet.
no. I might need to switch over to you in a sec. Just got something else. It's been one of them manic days. It's always on a Friday, isn't it? Do you not find that if anything starts going wrong, it's always on a Friday?
Yeah. I'll tell you what else tagged in. The pump short I got tagged into on the wicks. Yeah, if you need to attend something, we can put a marker in.
No, it should be all right. It would only take a minute anyway. I'd just hand the reins over to you. So we got a nice entry there on 8. So yeah, ICT. I don't know if anybody's got questions. Then I'm happy to take some questions.
Yeah, I mean, so I think diving deeper in. So I know one thing that we touched on last time is around breaker blocks. So we touched on how we trade order blocks. I think if we talk about how we firstly identify breaker blocks and then how we trade breaker blocks.
Yeah. And have you traded any since, or?
I have, yeah.
How have you found them?
I like them, yeah. I think they're quite useful. But yeah, I think probably it'd be quite useful to cover them for some of the people watching, sort of how you identify them, and then how you were able to then take positions around them.
Yeah. So I do very much like. Well, you already know I like breaker blocks, but I think Ergy was asking in CSE earlier about gold. If he's still watching, I'll just go over that for him.
Yeah, I think he's still watching.
So I think Ergy was looking at an order. I think he must have been using yeah, I think this one's closer to it. So I think he was looking at this as an order block. Now it is, I guess you could say it is, but for me, why I wouldn't go for this one is because we're already the problem that we've got, and I think we mentioned it last stream, the problem that you've got on gold is it's just uptrend, 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 uptrend. Now, the best order blocks are when you've got that accumulation and then you get the sudden expansion that gives you the breaker structure. Now, this does give you a breaker structure, but you're already in an uptrend, and it's kind of, this is just, there is liquidity here based on the wicks, but to say that it's this candle over this candle, because you could also argue that this all three of these is an order block because we're just in a giant uptrend.
Yeah.
So there is liquidity there, but at that point I would look at the 1 hour.
Yeah, it's a difficult zone to trade that one.
And then you would say, well, this is your order block. This one right here.
Yeah.
I know I have to zoom in quite a bit because my monitor's pretty large. So it is, but also if you just box that one out and close it over, you can see we've already tapped it twice.
Yeah.
So the move to play there was there, but it also didn't give us a breaker structure because we had a higher high. The higher high was up here, so the BOS didn't come until this candle here. So there is liquidity around there, but what you'll find, or what I find more interesting, is The break of structure came here.
Mm.
We have the fair value gap here, but also this
It's
is your
that
breaker
candle
block.
there. Yeah.
Yeah, because you've also got the change of character within this, because we bearish change of character here,
And
compressed
then
up a bit,
bullish
and
change
then
of character.
correct, yeah. So you've got them double stacked orders to both sides, which is why zone out, zone out, zone out, zone out, zone out.
And as you can see, it's
We've
held.
got,
It's held on its retests.
yeah, obviously we had that absolutely. I mean, that's like nearly 1,000 pip.
Yeah, that's a
move.
liquidation. That's a liquidation wick. They're one of those ones that you can sort of put to not ignore, but you put it to one side as not a normal piece of price action.
Yeah, but as a scalper, then you 1, 2, 3, 4, 5 moves out of there. So that was the move for me from that bit of price action. So yeah. The other thing as well, I guess because we kind of talked about breaker blocks and they don't look too dissimilar, is entry models maybe on the lower time frame. Let me see if I have, like, because I know Ergi was looking at higher time frame trading. So let me see if I can spot one on the 15
Yeah, you
minute.
probably want the 15 for this.
Yeah, so we do. I'm sure I saw one this morning actually.
What are we on here? Euro dollar.
Yeah, we're on euro.
Let's have a look.
Just trying to find an obvious example. If not, I'm just going to go to the 1 minute and find one.
Of a breaker block.
Because often what you'll find is, I think we might have something here. Yeah, so this is like one of the entry models that I use, which is where, and again, it's just basic market structure, but it's also like ICT type concept and whatnot, but it comes down to basic price actions. When I can find the arrow, is let's say you have a higher time frame point of interest, support, resistance, whatever it is, and then you've got trending price. Now, if I'm looking at a higher time frame point of interest, this is how I'll get my entries. God, I've drawn too many things here. So price tends to come down, sweep your point of entry, come back down, and then take off like that, which obviously we know is like change of character.
Yeah.
Because you've got your bullish breaker structure there. And that's kind of the breaker block, the whole breaker block model. But this is, I'll literally use it on the 1 minute time frame if I've got a high time frame point of interest. And you can kind of see it with euro, where we've got price trending down, and it is on the 1 minute, so you do have to kind of refine this. But you've got low, high. I'd say that is a lower low, lower high, lower low, and then here you get. Once you get
your breaker structure,
that's the first thing I'm waiting for. So that is literally what I'm waiting for in euro now, and we still don't have it yet. We've swept sell side liquidity by going over a session high. Now I just want to see the market show some weakness.
Yeah.
We might even have it on the 1 minute already, which
because
you kind of do. It's not super strong for me, is that? But
no, the bit that strikes out to me on that one there is you've obviously got the two relatively equal highs where we currently are. So you'd expect you'd want to see those swept before we move down.
So what I look for here is that you've got that strong displacement up because you've got fair value gaps. So that is literally like, I mean, the term that ICT uses is like, if you've got large institutional money coming into the market, it's like an elephant in a paddling pool, like
Yeah.
gets in and all the water
Yeah.
comes out the pool. Like, these are the elephant's footprints in the pool.
Yeah, they're the displacements.
So when you've got that breaker block within that fair value gap, that for me is like high probability. And you can see that is pretty much exactly what happens. So that's where my entry would be.
Yeah. And it came down and gave you a second go with that wick.
Yeah. So, and then that's your entry there, and then off you go. Other things that you can use, like ICT wise, is like something that I like to use a fair bit is the whole optimal trade entry thing, like premium and discount. So like if you've got like a price, I've not prepared one, but let's say you're looking at price moving and you've got up here is high price, so that is where price is expensive, so that's premium.
Yeah.
If I can write with this. And then I need to move this up. So what you have is, so you've got top, bottom, and then the midline. So anything above halfway is considered premium. Anything below halfway is considered discount. This is absolutely awful. Personally, I found when price is cheap, yeah, exactly. And again, it depends how you trade, because like, yeah, if you're gonna go long, then you want price to be fucking cheap. Do you know what I mean?
Yeah.
Like
exactly.
This is really like, people think whether it, I mean, I don't use it, I understand it. Whether it is overcomplicating it, I don't know. But you basically, if price is already up in a premium, then in order for you to say that you're going to go long, you want it to become into a discount.
Yeah.
So you wanting to see it retrace below the 0.5, the halfway. It just sounds so obvious, doesn't it? But you'll find it like time and time again over price swings. So for example, here today on Euro, you could see if you fib the swing from bottom to top, the point in which you get the explosive price movement doesn't actually occur until you dip into that discount zone. And then it blows. So again, it's just one of these things that they're trying to say, that is like, you know, a market maker, whether you add it to like a market maker sell model or a buy model or things like that, then that's just one of them things. I personally like to use the optimal trade entry, which is like, again, it's just the fib zone, but it's like the 62% on the fib. 62% to 70.5, I think it is. Which is supposed to be like the optimum like entry. So obviously it never came this morning on EU, but if you draw it over, and again, it is just a fib retracement level, like that's all it is. But you can see price tends to, when it comes below 50%, it tends to come to that 62-70% range before it moves. Whether people call that the golden pocket or whatever, then yeah. But it's
your
just
golden pocket.
Yeah, my golden pocket. Yeah, so yeah, it's just one of those things. Again, it occurs everywhere, and if people have got the time to watch ICT videos, and you can spend 3 hours listening on how to use a fib level. Yeah.
That gold is so annoying.
Probably my nugget of ICT.
It's such an annoying trade on gold because it's coming back down now. But yeah, I think that's interesting. I think the premium is quite a key factor in it. I think going back then to the Forex example,
Yeah.
how would all of these things fit together then? So how would you lean into that? Would you then target, I don't know, like a break, a block? Would you use, what other tools would you use to confirm your thesis?
So yeah, if I had like a break block, I would also be looking for fair value gaps in that same range. I would also be using like, yeah, sometimes I will have like 62% retracement on it. So you can see here what we're on here, the hour on the Aussie dollar. You see how we had a bullish change of character here.
Yeah.
Broken to the upside. So I would be looking around this area here for some kind of confluence. I can see there's a fair value gap there, and then if you feel the need to stick a fib over it, you can do, and I'd be looking for it to be within that 62% to 70.5. And as you can see there, like it is just dips into it. And this is all after the fact. Like I can't sit here and tell you that I've taken this trade today because I've not.
You're looking at it. Oh, yeah, gold is coming down quite. That stop loss is so annoying.
Yeah. Did you just get stopped out?
I got it's a bit stupid. It was a poor trade, but my stop was 4121, and we clipped 4121.34 before nuking, and we're about to nuke through the fair value gap. Oh, that would have been a beautiful trade.
If you enter at the 62%, where is the stop loss? The stop loss depends on liquidity. And again, like this probably wouldn't be the greatest idea because you've still got fair value gaps to the upside. If you're entering on 62, you probably want it below 70.5.
Yeah.
Depends what risk you're running. Gold, usually I will at maximum 50 pip stop loss. Anything further than that is too big for me when I'm scalping the 5 minute.
Yeah.
What's really freaking annoying is this trade is now running away from me after getting stopped.
I know. I'm just looking at it on my screen.
I'm going to give away some signals here, but look at where it's just, for fuck's sake. Fucking hell. Yeah, so if you look on gold, for example, we'll take yesterday's New York high to London low, and then look where we've retraced, which was the 70.5. I think I actually got in at 62 because for me that was a stronger candidate, because if you put a line on it and draw it across, it matches up with liquidity that we're looking at here. You've also got fair value gap, 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 fair value gap. So that was why I went for that one. But obviously 70.5 was the play.
Yeah, it's so annoying, isn't it?
Yeah.
Oh well. We've got Ergi here saying, if you enter at 62, where's your stop loss?
Yeah, so that's what I was just saying. I would be putting it above the 70.5.
Yeah.
I was too greedy here. Obviously 70.5 was about 90 pips away, so I stick to my rules, 50 pip stop loss max. That's why I got stopped out on this one. So yeah, that's it really.
It was a textbook trade though, wasn't it? Like straight into the order block, into the liquidity, and then back down.
Yeah, it's always good if you've got like 62 lining up with order blocks, which you probably will somewhere. I think there definitely was one on the 5 minute, because that was my other reason for taking that order block there. Well, again on the 62 was because this was the order block that gave us that break of structure to the downside after this accumulation. It literally all boils down to market structure, really. I think, like no matter what ICT technique or concept you want to deploy, it comes down to knowing your market structure, and that's why it's so important.
Yeah. And then looking at this now, then, so where would you expect this to go next? Are you expecting us to fill in that the rest of that fair value gap, or do you expect us to? Because I know on the 5 minute we're on top of an order block. Where do you expect this to go from here now?
So, I mean, you can see so looking on the 1 hour, we're still not bullish for me yet. We've obviously had the horrible liquidation, lower high, lower low. We've not broken this swing high yet. Yes, we've made a lower low, so that's indicative that we will go on to push price and deliver higher. But for me, we're not bullish yet, so I'd still be thinking bearish. That being said, I only look at the 5 minute when I'm trading gold. So if I just get rid of some of my uglier drawings here, we will probably, and again, I've not really looked at this, so, but again, there's nothing to say. Like you say, we've got the 5 minute definitely has had a bit of accumulation before that expansion, which caused a break of structure. So you could easily say, yeah, order block somewhere around here. So that's potential. Again, you could literally just fit it out using the optimal trade entry and seeing where does that 70.5% line up. Well, actually, it lines up with that order block that we're talking about. So that's certainly an area where you could consider. If you're a backtest trader, you're going to look at that and you're going to say it's backtest. But I'll always look to the left as well to see what I can spot that tells me that there's liquidity going to be there. And for me, you've got fair value, you've got an inversion fair value gap there. You've got fair value gap here, fair value gap here. Tiny fair value gap. And it also lines up with these wicks here. So I know that if you box this area out somewhere and drag it across to the right, we've got liquidity in there. So yeah, I'll probably be looking for an entry around there. So I'll leave that on my chart. Keep an eye on it. In the meantime, I'll simply just wait for market structure and I'll just trade the bosses and the chops and all the good stuff in between.
Yeah.
I don't know what about you. What's your thoughts?
Sorry, I was distracted. I was in some options that I assumed were dead, and they're back from the dead, and I've just made 600% today. I thought they were dead. I thought they were dead. Oh, have a look at the chart for it. It's the ticker is FUTU, FUTU. I literally bought the options like the day before China stock war.
Oh my goodness.
And my strike expires today at 185.
That's mad. Very nice, sir. Very nice play.
But I think I'm going to try get out of the rest of them here. Because these have just been hammered.
Yeah.
Oh, well, that's money that I assumed was lost.
Not today.
Yeah.
Not today, mate.
Fantastic.
So is your trading days done for the day then, is it?
I think so.
Very nice. Can't complain about that on a Friday.
Oh, well, I'm out of this thing now, so I hope it doesn't continue ripping upwards. We have had a mega bullish day on the markets today. Fucking hell. Whoa.
Yeah, it's not been bad, has it? I've not actually looked at the NAS. How's that open today?
Strong. Oh, this thing is just ripping.
Yeah. There has been a lot of news today, to be fair.
Yeah.
You got any plans for the rest of the day, mate?
Close out some trades and spend some winnings. Honestly, I fully didn't expect that. That was they were expensive calls as well. Like I've spent $2,000 on the calls. I thought they were going to expire today, worthless. They've come.
That is not a bad day.
They've come back from the dead.
Can't complain about
that. But yeah, I don't really have much else. I'm on a Spaces in 10 minutes anyway, so I think we can wrap this up, and we can cover some more of this next week.
Well, it looks like if anybody wants a signal, so is still here. So this is another way that I use the optimal trade entry, and I am giving up too much alpha here. There is right. So we've quick signal before we end the call. We've swept London high. Tapped into this liquidity here. We've made a lower low, but no closes above. And obviously now we've had this candle close down here. We've had a bearish boss or change of character. So now I want price to retrace back up to, for example, that premium range so that I can then go short. So I'm looking for what you can do. Now price is still moving down. So if you take your fibs with the optimal trade entry and just keep moving it down with the price from the sweep to where we are now, I'll be looking for an entry around that 62%. And I was already eyeing this area up anyway because it's an inversion fair value gap. So I know liquidity sits there. And it sits just above those relative equal highs there. So for me, I'm going to be looking at going short. Obviously, I go for going 1 to 3. Then you're looking at a trade. It's going to look roughly. This is like full blown signal here. Which doesn't. So you should be full profit. And it doesn't even sweep London low. So it's not. It's not impossible to get to. And you know that liquidity sits here, and from ICT we know that liquidity rests below old lows and low highs, old highs. So that's where we're looking. So there's a signal for you. Take away.
Yeah.
If you want to.
There you are, give it a screenshot.
This news riddled day.
Give it a screenshot and set it. Fucking hell, I can't believe this Futu. Oh, I thought it was dead and buried. Yeah, I thank you very much, George. Yeah, hopefully that was a nice, quick whistle stop tour. Hopefully you can take some not signals that may or may not result in profit. Wizard or any of his guests are not responsible for any losses. However, we can take credit for any gains. I jest. Take care.